Thank you. So I'm Anita. I work at BNP Paribas Real Estate, and I oversee the logistics and industrial asset class at the company. We are a full-service consultancy operating in 29 countries in Europe and a top 2 broker now for selling and buying logistics and industrial real estate in Europe. So I was really delighted when Richard asked me to give you key highlights of what's happening in the market today. But firstly, I think it is important to recognize where we have come from. I think the time when we debated whether industrial is an established asset class is well and truly behind us. We have a variety of tenant activities and demand in a place, the quality of the assets being built, and also the variety of investors active in a space and trying to get into the space have really contributed towards the overall attractiveness of the sector. Last year was the highest year on record. We had about 40 billion euros of assets transacted, partially because of some big deals like Logicor and Gaisley. This year, we don't have those mega deals, but overall transactional volumes are trending similar to higher than last year, excluding those platforms. So overall, investor demand is really good, from core all the way to opportunistic and value add. The origin of capital is really wide and global. So, for example, a number of Asian parties have and are in a process of acquiring prime logistics in different countries in Europe, and we have had the pleasure to work with them on some of those. I think occupationally, we all recognize the fundamentals are also strong. We have e-commerce, as we all know, driving the demand. Vacancy rates are very low and close to frictional in some of the markets, and also tenant retention is really high. But what we do see is an emergence of kind of subcategories within the logistics and industrial space. So, for example, the most talked about clearly has been the last mile, city distribution. But what we also see is structurally different types of warehouses being built. For example, the robotic facilities for e-commerce. And that is actually a really good example of how technology is impacting in the space around us on a logistics and a warehousing space. So looking ahead, I think we can all feel quite optimistic about the sector simply because no matter what happens around us, economy, interest rates, the trend is for people to shop more online, and online retailing needs more warehousing space than traditional retailing. So occupationally, fundamentals are robust. From an investment point of view, I think we feel very optimistic that this year's volumes will be good. And judging by the capital in the market and capital being raised for logistics, we're also optimistic that the investment volumes will remain at sustainable levels for some time to come. So I would say those are key highlights, and I'll hand you back to Richard.
We're definitely in the middle of the logistics sector. Ian Worboys, I'm the CEO of P3 Logistic Parks. We own 4.2 million square meters of logistics across 8 European countries. We're not in the UK, but we go from Romania right through to Spain. We have an additional 1.8 million square meters of available warehouses to build. So we're very much a developer, long-time owner of property. We also do our own asset management and property management. We were bought about 18 months ago by GIC, Singaporean Investment Fund, and at the moment we're in the middle of a lovely growth period with a huge development pipeline and taking advantage of the market and being the pride of the sector, rather than 30 years ago when I was started, when industrial warehousing was somewhere down there.
That's very true. Ben?
Good afternoon. Ben Bannatyne. I'm the president of Europe for Prologis. We are also a developer, long-term owner of warehousing globally. In Europe, we have around 17 million square meters across 12 countries. We intend to continue growing in those 12 countries. We are not geographically expanding, but we are expanding in those markets through development and further acquisitions.
Great. Karen?
Okay, hi. My name is Katrin Poos. I'm one of the managing directors of RLI Investors. We are independent fund and asset managers investing currently only into Germany with institutional money behind us. We have a portfolio, meanwhile, of around 800 million euros. We have been focused on only logistics since our founding in 2014, and we will continue to stay and invest into that kind of property or that asset class, but probably we are going into Europe as we think that it is good to do so.
Great. Philip.
Philip Dunne, Head of Industrial and Logistics for CBRE Global Investors. We have just over 8 billion of AUM in the sector, so a pretty sizable player with a strategy to clearly grow that like everybody else. Getting access to product, we can cover the entire investment spectrum from core plus, all the way through to value add. So we're in a really great place from a capital perspective. We've got about €1 billion of capital stacked to deploy.
Great. Mahdi.
So good afternoon, everyone. So I feel like the non-specialist on this panel, and I'll give you some figures also in euros, maybe not in square meters. We have about 4 billion in under management in terms of industrial logistics in Europe. We don't have a specialist vehicle. We actually have logistics industrial in our various portfolios. So, you know, we can arbitrage between different property types. And of course, like probably everyone else, we have the ambition of adding that weight in our portfolios across Europe. And my role at LaSalle is really to help guide investment strategy and think of those big trends and also some of the risks that might be out there. When will that great music eventually stop, and how long will it last?
Okay, great. Robert.
Robert Dobrzycki, I'm CEO of Panattoni Europe. Panattoni Europe is a privately owned real estate development company, industrial specialist. We are present in Europe, in UK, Germany, Poland, Czech Republic, and Slovakia. We are probably one of the most active players on the development side. Currently, we have around 2 million square meters under construction.
Okay, great. Philip, let's start with you, because you've had some time away from the sector and you're back. So it would be interesting to get your perspective on how that's changed, not only since EXPO REAL last year, but also because my sense of it is that there's been a huge change. But what's your sense of how the sector is now versus kind of 3 years ago?
Sure. So I suppose the first thing is all of my predictions that I made 8 years ago have come true. And, you know, it is probably the asset class that is most in demand. Clearly not enough today to go around. I think, you know, it's over the last 2-3 years since I've been away, you know, clearly the market has moved. We did predict that the spread between industrial logistics particularly, and offices and retail in terms of cap rates would come in, and that has absolutely happened, and it may even come in a little bit more over the course of the next 6 to 12 months. So I think the attractiveness of the asset class and pricing and volume of capital chasing it is the most impressive thing I think that's happened over the last 2-3 years.
Okay, good. And Katrin, just coming to you. So, you know, investor demand is high. How much of this do you think is based on current demand, and how much of it is based on kind of expected growth and e-commerce? What's your sense of that?
So I think the current demand is very high from our investor side. It's of course very, very high. Although we see high for Germany, they even asked meanwhile for investments into Europe. On the occupier side, of course, it's high. We have, I must say, or I can say, that we recently let our last vacant space, so we have a fully occupancy in our portfolio. So occupiers even ask for more space. That keeps us very confident that this is going on. In the near future, and near and even longer future, and also e-commerce. If we look at our portfolio, 50% of our portfolio is with occupiers from the e-commerce sectors. 28% are multi-channel occupiers, and the other 22, for example, are in cross-dock properties. What we see as one of the properties which is very important for us. In Germany, we are investing in Germany. What means cross-dock is close to metropolitan areas as one of a property kind that can be valued as urban logistic properties, and that is something what is the highest demand in the current market, I think.
And what's your sense, Ian, just in terms of that? That's great to get that update on what's happening in Germany and what you're seeing there. What are you seeing in your portfolio, Ian?
I mean, I think I agree with a lot of what's been said there by Katrin. And we're still seeing strong demand from occupiers. We're seeing high rates of occupancy, up in the 97s plus, which is something we've seen build up and it's sort of continue to be very high. So we're seeing sort of like a almost perfect. There's not much supply. There's very strong demand. Development is good, as Robert said, across Europe. So we're seeing a very positive market. The worrying thing is the external factors that could upset this perfect weather that we're all sailing in. Whether that's trade wars between China and America, whether it's interest rates. There's lots of things that could upset what at the moment is a market that we all love. I'm 36 years. I've never seen such a great market as we have now.
It's interesting actually to think, Ben, as well, that when we were looking at this, first of all, 6 or 7 years ago at EXPO REAL, running these sessions, actually there was a lot of discussion then about how could the industry absorb the overdevelopment that there'd been in a way. And now we're in a completely different place. But where are we with... I guess also for you, are you seeing the same things that Katrin is seeing, that Ian's seeing in terms of occupation levels? And what does that mean in terms of development?
So yeah, I mean, we're seeing exactly the same right across the portfolio. So we're 97.5% leased across Europe, but that means we have a number of countries that are actually 100% leased. So that's something we've obviously never seen before. But it's having the desired effect, which we've been pushing for years, which is finally to see rental growth coming through. So we've seen really strong rental growth in the UK for the last 2 years, and particularly this year, Germany, parts of Central Europe, particularly Prague, the Netherlands. And it started off slowly, but the last quarter we've seen significant rental growth, and I think that is going to continue and accumulate over the coming quarters. So cap rates may still have some room to move, but limited. So I think any capital value appreciation is going to be from rental growth, but I think it's going to be fairly significant.
Okay, good. And Mahdi, you're obviously looking at this from a pan-European view, but also across all of the sectors. So when you're looking at the sectors, how do you see logistics within that? And what are the challenges that you see for it in comparison to the challenges that you're seeing for other areas?
I mean, what we had begun doing, I don't know, probably 4, 5, 6 years ago is just acknowledging that many of our institutional portfolios or funds would have to be rebalanced in our portfolio construction. Probably downweighting, gradually retail, and then upweighting other property types in no particular order of importance. Offices, industrial, logistics, of course, and alternative sectors. What's been really surprising with the logistics and industrial is that occupier behavior has been had been very quiet for a long period of time after the GFC. And then suddenly, as you said, 2-3 years ago, things started popping up. We've seen rental pops of 10, 15, 20% in very select areas, and those areas, the number of those areas are actually increasing, which is great to see. If there's a great feel-good factor, and it's actually I think someone mentioned yesterday on a panel also it was the flavor of the month, but actually it's more than that. It's a structural change. So we've acknowledged that. We've upped our portfolio weightings to industrial logistics. We do have a strong preference for urban. The more urban it is for us, because we're long-term, we think about residual value. We also think about, long-term, what's going to happen when you have, driverless, vans and trucks and, those locations that were great at one point, are they still going to be great? Are we going to be left with, probably the wrong end of the negotiation bargain? So we're not developers. We don't have a specialist fund, but we do want to add those locations and those property types into our portfolios. And the other thing we're doing is we're accessing the products through various means. We're funding it through debt, we're funding it through equity, and we're forward funding. So we're taking those steps into making sure we get the best product into our portfolios.
So you're forward funding development as part of that?
Yes, absolutely. And of course, we're not taking the development risk or the construction cost risk, or to minimum extent, we're taking the leasing risk.
And Robert, in terms of the market at the moment, what are the challenges that you're seeing? We had in not related to logistics, it was actually in another sector panel, but also that construction costs were going up, and that also there were issues with human capital, with workers. What are you seeing as the challenges that are maybe holding back growth? What's your sense of it?
Yeah, absolutely. I mean, the construction cost rise over the last 12 months is amazing. I mean, we see on a different markets between 10 to 20% construction cost rise, and it's hard to reload immediately everything to the customer. So that's obviously a challenge. That's a pressure on us. That's a pressure on our contractors because obviously their construction costs are going also up with the subcontractors. So that's a big factor. Land pricing is going up also, and what's also important is that e-commerce is much more labor intensive comparing to the old traditional warehousing. So the labor component is playing a much bigger role than in the past, and it's also influencing the location decisions. So our clients are looking for labor, and they are depending the decisions on the labor availability. And obviously on top of it is infrastructure and other factors which were in the past, but today e-commerce is labor driven, and that's changing the pattern location-wise.
Philip, just coming to you, Mahdi there said he'd got a preference for urban logistics within their strategy. What's your view on that in terms of the logistics sector specifically? Are you looking at a mixed strategy of urban as well as big box? What's your sense of it?
I could very simplistically say we'll have all of the above. I think, you know, there's, I don't have any doubt in my mind that the supply chain requires you know, first-class modern stock in a number of different places and not just urban, right? You know, we need to be close to large population centres. We need to have concentration in the major logistics hubs and corridors, and the extent to which there's opportunity to service that last mile, the true last mile. I think that's something that's evolving, and I think we all want to have access to that and a part of that. It's an evolution in the supply chain, not a revolution. So I don't think it changes fundamentally, provided you've got product in the major infrastructure conurbations and routes where we need to service the consumer ultimately. So I think it's a little bit more of all of the above, frankly.
Okay, good. Yep.
Yes, I mean, we're also very much focused on what we call last touch, so similar to last mile. But it's definitely an add-on to our existing platform, so it's not and/or type situation. And the problem with urban, clearly, is the closer you get into the major population centres, the more difficult it is to piece together sites. And I don't think anyone's 100% sure yet how to go vertical, you know, whether you do it with ramps, whether you're doing it with lifts. So there are a number of people starting to bet on what that might look like and starting to put developments together. But it's going to be very interesting, I think, when we're here in 2 years' time to see who were the winners and who were the losers in terms of trying to get first mover advantage and maybe getting it wrong. So I think that's going to be a very interesting sector to watch.
Okay, good. Yep.
So I think in regards of urban logistic, of course, it's what everybody is asking for, but we as investors haven't seen a real urban logistic property, so we don't know now. I think there's a lot of testing and thinking, but there's no real product so far, which is investment grade product for institutional investors. So I'm very keen to see what the future brings and how the ideas end up with. And additionally, of course, urban logistic is very important, but on the other hand, classic logistic will be important as well, because everything what you order has to be stored, commissioned, packed, and sent to somewhere. So I think these are both sectors which are relevant for the future, and not only e-commerce and last mile and whatever, the closest you can be to your occupiers or your customers.
And what are, Ian, what are the challenges if you're looking towards the future? And Mahdi mentioned some of that in terms of driverless vehicles. You've obviously got electrification coming in as a requirement from regulation. How are you looking at those things? I know that you do an event, and I'll be moderating it next week in Prague. But how are you seeing the future, and how's that influencing what you're doing at the moment?
Wow. That's quite a big question, that. So I hope
I'll limit it to logistics. So
okay. And I think we do have a conference we run for occupiers. We've got 160 people turning up next week in Prague to actually look at what will artificial intelligence, what will the effects be on our industry. We started it 5 years ago, and it's amazing how what was predicted 5 years ago as being 15 to 20 is actually already happening now. And I think this speed of things is catching us all up very quickly. So we're seeing, I mean, obviously everyone's heard about lorries going down in platoons down the motorway, driverless cars. They're going to be with us very, very soon. They're much safer than humans driving. Robert and I used to chase each other down the motorway, and I promise you, driverless cars will be much better than the two of us driving. And as you go forward, warehouses, I mean, our aim would be to try and build a warehouse that is completely, it generates its own power, is able to store its own power, and with Tesla batteries and the equivalent of those, that's becoming more real. Will collect its own water, clean its own water, and will become a self-sufficient powerhouse. And the advantage for the customer is you then have lower cost. So in a sense, we're able to push rents to make up for the lower costs. But it's not that far away. I would hate to predict, but I would guess within 3 to 5 years we'll have those in our portfolio, as will most of the people here. And technology is moving on very quickly. I think there's then a social side, which is not to be discussed here, but I think there's social problems in the future when you have no workers in the warehouse, you only have robots, where you have no drivers, your taxi to work or here will all be driverless. Where do all the people work? We can't all play golf and work and just spend all our time in leisure. And what a government's doing to actually change that, because if robots are replacing people, people aren't paying tax. And if there's no tax, how do governments look after healthcare and everything else?
I have a feeling in the 20 minutes left that may be a bit of a big topic to tackle, but Ben.
So no, I was just going to add to that. I mean, labour would seem to be the biggest problem that all of our customers are facing. And I don't think that robotics is going to change that. I mean, people are investing in automation and robotics because they can't get the labour. So I don't think we're going to have millions of people out of work. There will be a different type of work for them. So I'm not sure the social issue is so big. But clearly the challenge now is how do we get labour? How do we get people into the logistics sector? How do we train? It's not a sector many people aspire to in terms of truck drivers, etc. So we need to get these people back into the system because I think that will be the biggest inhibitor of growth going forward.
And Ian, you mentioned sustainability there. Philip, that interestingly, probably 7 years ago, that was less on the agenda than it is now, and because logistics were just seen as a shed, not much you could do with it, really. But my sense is that that's changed quite a lot. Is that being driven by the capital that's coming into your funds? Is it being driven by the occupiers? Is it being driven by CBRE's own corporate responsibility? What's your situation in terms of sustainability, and how does that play into the sustainability of the investment?
I don't think anything significant has changed from an investment perspective. Investors want the most robust, liquid investment that they can get their hands on. So I think the change has been driven by the customer, and there's a whole raft of changes. Every different type of customer is driving change in a different way, but clearly what we see in terms of automation and robotics, that has been significantly driven by the large e-commerce players. And I think that will continue. But if you look at any major manufacturing facility, if you're looking at the automotive industry, it's not entirely run by robots. There's a huge human factor, and so that will continue. Access to labour is clearly a challenge, which drives the need to be as close to population centre as you can be. It's the best chance you have. But it's, interestingly, the e-commerce players are marching forward. And you see Amazon busing people in from various more remote locations. I was in Wrocław 4 weeks ago, and we have a building adjacent to theirs. There are two facilities, and it was about 5 o'clock, and we were told to get out, otherwise be stuck in a bus traffic jam for the next hour and a half as all of the workers left. So it's clearly a challenge, it's an issue, and it's a problem that the customer needs to get their heads around and work their way through. I don't think, again, it's not revolution, but I think it's something that will drive and determine location, and customers will continue to get more focused on location than they've ever been before.
Okay, and Robert, in terms of location, let's pick that point. Have you seen location being influenced by more urban logistics? Have you seen it being influenced by changes in terms of the demand for e-commerce? What's your sense of that, or has it really stayed as the banana as it was before, or what's your sense of it?
Absolutely, as said before, e-commerce is much more labor intensive. So the location is driven by labor. So big fulfillment centers has to be close to population centers. At the same time, they have to be quite close to the customer base. But customer base proximity looks like recently is not so important as the labor proximity. So we see that. We see a big trend of e-commerce locating and serving countries from other countries. So Amazon is obviously on a big expansion program, and for instance, they are building new investments in Poland, Czech Republic to serve Western Europe. So that's a kind of a trend which we haven't seen before. Before we saw production facilities serving Western Europe from Central Europe. So this is happening. On top of it, you have last mile logistics, obviously trend, which is getting closer to the population center, to the customer base, which is kind of obviously putting pressure on us as a development company to kind of produce this type of product, which is not the most. That's not the easiest to produce, obviously, because of obvious reasons, land constraints, permitting and competition from other sectors. But we are rolling that out also. So e-commerce, mainly e-commerce, is changing the landscape completely. And we felt before that dynamics markets are just Central European markets. Right now, because of e-commerce, we see the same in UK, France, and Germany. So obviously, because of that, development company like ours can be active. And we are thankful that there is shift from retail to e-commerce.
And this is for anybody, really. Is there, Katrin mentioned there the difficulty of finding a product that institutional investors would like in terms of that urban logistics. Is there a role then in, this is from the UK, but and I'd be interested to see whether it's the same in the rest of Europe, that as the larger retail, slightly out of town boxes that were doing electronics or were doing those kinds of things that are smaller maybe than a traditional logistics hubs, but could you see those kinds of things being converted from what is quasi retail into a change of use into urban logistics?
I think just to jump in here, this is exactly what we've actually done within our own portfolios. When if you look at some retail warehouses or pieces of land where you had retail, but you had possibility of having an extension that was actually converted into the so-called last mile, which in reality is more last 20 miles. If you think about e-commerce, so that, we've definitely done that. The problem is the quantum. It's very difficult to deploy significant amounts of equity for our investors, but because it's so intensive and granular. Of course, it's much easier to do huge big box, 100,000 square meters. You're getting deployment way easier. But clearly, that flavor of getting an urban, serving the last delivery, last touch, as you mentioned, that's something we would like to add. And we're doing it with our existing assets. And we're happy to have taken those positions in the past that were very urban, because that gives us the opportunity today to profit or to benefit from those trends.
Okay, good. Ian, you want to
I think we have to be careful what actually is urban logistics. So everyone, from SEGRO, everyone has suddenly said my industrial space in the city is now urban logistics, because it can, in theory, serve urban logistics. But true urban logistics is a building that probably has a site density of maybe 30%, maximum 40%. It's got lanes and lanes for vans to queue up, because it's really important that the distribution goes out very quickly. And so a lot of people are saying they've got urban logistics, and they haven't. They've just got industrial, and they put a new sticker on it. And that there's so much of that we see. And I think that there will be a market, it started already, where you're seeing Amazon again leading the way with specific buildings with high numbers of car parking on, hundreds of vans on, which wouldn't fit in a traditional industrial estate. And it could be that actually retail space on out of towns is the one that can do that, because they have a lot of parking spaces, they have a lot of yard manoeuvring, more than what was industrial. So I'm a fan of trying to make sure there's the right definition.
So just one thing to add, I think the whole urban logistics model is still in its infancy, so we're going to see a lot of change, but no one really knows what people are prepared to pay. And I think we get stuck with rents that we can achieve elsewhere, and we believe that's the market. I think you'll find when people can pay 2x, 3x, 5x what we believe they can pay, you'll see a completely different dynamic, and I think that's coming. So we're pushing rents where we can in these urban locations, and so far we don't believe we're anywhere close to the ceiling. So I think once we truly understand the economics of these type of urban logistics, you may see a different, or you may see a quicker adoption when we see where rents really can go.
Okay, good. And Katrin, in terms of Germany, what are you seeing from an asset management perspective? Are the clients becoming more demanding in terms of what they're looking for? How active is asset management now?
So since we are a long-term investor, so we have a long-term investment strategy within our funds, asset management is obviously something very important. And the tenants itself, the occupiers itself, they ask, of course, of quality and the ability that they can adapt, or we as investors or owners can adapt the property to future users, maybe additional electricity or whatever is useful in the future or needed in the future. And of course, on the other hand, if we want to look into Europe, then tenant relationship is very important for us. It's anyway important to know what your tenant is doing, what your tenant wants. And if they are, and most of them are, international operating, then you have to see and manage their demand and be prepared even to develop or go in cooperation with developers if you have some adjacent space or even space on your plot, then to develop it for the tenants. So there's a lot to do, and it's quality and it's health and safety issues what they are looking on. There are so many aspects what you have to look on when you have a long-term strategy, and I would say asset management is always very important from all kind of perspectives.
Okay, good. Philip, just picking up from you, in terms of lessons maybe from other parts of the world where CBRE Global Investors are operating, are there things from Asia, things from the States, whether that's in terms of rentals, whether it's in terms of multi-story in Japan or whatever, things that are being seen there that you think we will see in the European market?
Well, I guess the thing that everybody likes to talk about, and Ben alluded to it, is the multi-level. But the reality is we have multi-level. E-commerce has brought that, and Amazon has probably been the forefront runner in creating multi-level, structural multi-level within their facilities and going higher in order to accommodate that. The thing that everybody likes to talk about is the Japanese model. Are we going to see the multi-level with ramps? And we had a meeting with the ULI working group yesterday, and there's a few that are about to embark on that as we understand it. So I'm not sure that I would choose to be the first to have a go, but I think the extent to which there is land constraint, particularly in the larger cities, it's going to make sense, because if you can't go multi-level, then the land value probably lends itself more to residential. So multi-level will make sense in certain locations. I wouldn't expect to see it everywhere. So maybe London, Paris, but I don't think you're going to necessarily see it in Amsterdam, Warsaw. So you think about those population centres that are 5, 10, 15 million in terms of reach, then land constraint will lend itself to needing to adopt that type of model. I think other things we're seeing, rental growth we're seeing, it's been occurring in the US for the last 6, 7 years, and we thought it would come earlier in Europe, and part of the reason it didn't come was because capital values moved at a pace that we didn't forecast. So I think the market has got to a place of stability and continuity that rental growth that we've seen in the likes of the US should emerge in most of our major markets. The only thing that will be a headwind to it will be the pace at which supply comes into our markets. So I think if we watch supply and we watch rents, we'll be able to tell exactly where the market is going.
I mean, that's interesting. And Robert, in terms of that dynamic between supply, development, the risk of overdevelopment, which happened in the previous cycle, do you think we're in a different place now, that there is less exuberance, that actually it's much more controlled based on what occupiers are looking for and what they need?
I think we are in a completely different scenario right now. I mean, last time there was no e-commerce, obviously, in such a scale. And last time, speculative financing was really available. Currently, that's still under question mark. So supply is still, speculative supply is still quite limited comparing to the demand. I mean, we built really a lot. And whatever we build on a spec basis or partially spec basis, we usually lease before completion. So at completion, we don't have any vacancy. It's hard to build fast enough to create vacancy. I mean, that's what's going on right now. I don't see the same thing happening what happened in 2008. And then e-commerce is a big driver. Construction cost challenges is not helping, but also speculative financing, not available this time, is helping to control the supply.
Okay, good.
So, sorry, when the music stopped in mid-2008, we had 18 buildings just delivered speculatively in the UK. And we had similar amounts across Europe. That will not happen again, for sure. And secondly, if the music stopped today, 1 year's take-up would get rid of all vacancy. Back then it was 5 years take-up.
Right.
So there's a completely different market dynamic than there was back then.
Okay, good.
I think just going to pick up on that speculative, finance, the development finance. That's the key thing today. That's probably also the reason we actually have tried to fill part of that gap with our lending program in the UK, but also in continental Europe. But I think, yeah, as you say, we'll keep an eye on that particular supply response. I think the complexity of the buildings today, that e-commerce drive, is probably also impeaching that sort of big box development that we saw in 2006-07.
Yeah, I completely agree with what everyone's saying. In terms of where we were in 2008 versus now, it is different. So I think the only thing that watching supply and rents, if there's a slowdown and supply is reasonably in check, all we have, and all we experienced back in 2008 was a period of 6 to 12 months when nobody would make a decision. There was zero decision making, so nobody was leasing space, nobody was releasing capital. I don't think a natural cyclical slowdown in the economy is going to create the same response. So I think the market is, in terms of supply, demand, and availability of product, I think it's in a much different place. It is much healthier. It's not to say that it's completely weatherproof to a slowdown, but it's not going to create the same flux that it did last time round.
No, good. And Katrin, let's take Germany as an example, but how easy is it now, given the competition in the market? Blackstone was the last one with Logicor to actually create a large portfolio and aggressively grow that. How practical is it for a smaller business to grow considerably? Are there still opportunities? Do you still see that kind of opportunities as a player here in Germany?
So if I have a look on our track record and what we were able to buy within the last 2-3 years, I can say yes, for sure. On the other hand, of course, you need to have the money and you need to have the ability to compete with those who agree to the current yields. And if you can't do that, then it gets a little bit difficult. On the other hand, additionally, I would say if you are then able to look at some added value properties or some development risks to take, then again you are able to build a sustainable and good portfolio, and that's what we can do. And you need a good asset management to be able to handle all those means from the refurbishment, the development side, and you need to be able to see all the opportunities in the market. So you have to have a good research and, of course, a good network, so that you are not the one who is only able to buy from the big brokers. You need to have a network from probably smaller ones, and even from the tenant side or from other owners. So, and that keeps you in the business and competitive in regards of the other players.
Okay, good. I want to leave a little bit of time for questions if you've got individual questions that you want to ask after. So I've just got one last question to everybody, which Ian, Ben, Philip, Robert, everybody, you know that I always ask this, so you can't say that you're not expecting it, which is, it says here, beds and sheds, urban logistics or big box, which cities and which asset types. So for everybody here who's interested in investing, where should they be looking? Which of those categories do you like best? Let's start with you, Robert.
Well, I still think there is a lot of opportunities on the value add side, and obviously we are a development company, so I mean, developing and exiting the product creates value add returns. But there is also a lot of opportunities right now, I would say almost everywhere in Europe, in kind of a portfolio accumulation, either through development or acquisition. I mean, scale, it creates yield compression, so I think that's what you can do almost everywhere in a very established places where liquidity is there, and you can exit larger portfolio and buy in smaller pieces, and that's how you create value.
Okay, great, Mahdi.
Well, I think I'm probably going to repeat myself in the sense that we have a very strong conviction that this is something that's going to be added and increased in our portfolios. We want to stay, and we're biased towards the more urban, and that's the definition. We can expand it. The other thing, maybe in slight opposition to our views on offices and to some extent on residential and retail, is that we're probably happier here for this particular property type, given the e-commerce trend, and that's a secular trend, to actually go into smaller cities. But then we have to accept those granularity of assets. We can be patient. We think this is a long-term trend. There'll be wobbles, and we'll have interesting entry points. But again, we think this is a very very strong sector for the next couple of years, certainly.
Okay, Philip, you already mentioned you're looking for everything.
Well, everything relative to
yes.
in a focused way.
Yes.
To be clear, yeah, I think right now acquiring is hard work, and there's less capital out there where pricing works in terms of delivering the kind of returns the capital needs. I think the greatest opportunity is growing and developing relationships with the best developers in the core markets that get you access to pipeline. We have an ambition to grow our platform right across Europe over the next 5-10 years and beyond, and we're increasingly seeing the best opportunity to do that through those types of relationships, where we can either take a combination of simple forward funding all the way through to full-on partnership and development risk. So we like that model, and we want to do more of that. We have a number of those joint ventures up and running already in Europe. In terms of cities, it's access to the best sites and product in the Midlands, the UK, and London. We'd love to have more of that. And then it's all the usual suspects in terms of the continent. We're finding it really hard to find product in Germany, so Germany would be a priority for me, as well as obviously investing in the other markets. But Germany, UK, we'd like to do a lot more there if we could. Okay, great. Katrin?
Of course, still into logistics, and then I would say as close as you can get to the metropolitan areas, Europe-wide, gateway hubs, all what serves the e-commerce business, because that is the driver. And additionally, I would say some brownfield development should be very interesting in the future as well.
Okay, great. Ben?
So I think for us, globally and certainly in Europe, is focused on what we're doing. I mean, leasing space, developing new space, acquiring new space. But I think where it gets really interesting and where a big focus for us will be is with the platform we have, how do we push valuation above just NAV? So we're really trying to get additional income out of our existing assets and our existing customer base through additional services. And I think technology and data is going to play a huge part in that. So we will continue to do what we do, but I think the search for additional income from our current platform will be a major focus going forward.
Okay, good. Ian?
Yeah, I think as Prologis experienced in the UK, rental growth is something that we need to see more of. This is the perfect market. When you have a market like this, we all suffered as developers with tenants back in the recession. We'd do any deal to get a tenant. Now the powers with the landlord and rental growth will happen, especially as Robert said, as construction goes up in build-to-suits. That has to be passed on into the rents. I think on cities, we're across, I say, 8 countries. We'd love to grow every one of them. So it's where our occupiers want to be.
Great. Thank you very much.